Hello, guys. How's everyone doing? Hope everyone is having a great start of 2024. Welcome to the first analyst call of 2024. And let's get started. But before I do, I'd like to remind everyone that nothing of what I say is considered financial advice. And I'm happy to answer all your questions after this presentation. Now, let me quickly share my screen. Cool. So for this presentation's agenda, we will go quickly through what happened in 2023. It was a very busy year, and 2024 is not looking like to be any less busy. After that, we will go through a market update. We will talk about inflation in the Eurozone and the US, how it's back up in December. And we will talk about Bitcoin's milestone, how it affected the price, and what we should expect moving forward. And last but not least, how Ethereum is regaining momentum. And we'll deep dive into fundamental metrics of Ethereum and what to expect moving on. As I said, 2023 was a busy year across all board, but the main takeaways were in chronological order that Bitcoin has really materialized its thesis or the product market fit since it increased by 40% on the back of the US banking crisis in March. It has really resonated with everyone as a hedge against currency debasement and adversary monetary policy. And this really materialized during the collapse of SVB and Signature and Silvergate banks in the US. Another takeaway was the increased appetite and the onboarding of more TradFi players in the crypto space. More institutional investors are coming to realize that crypto is here to stay. Another thing is there has been a lot of court action the past few years, actually not only 2023, but we have finally reached a resolution. We have finally reached settlement. There have been some regulatory wins with Ripple and Grayscale, for example. And there has also been some filtering out of bad actors like Binance's CEO or former CEO, SEZ, and SBF. And Bitcoin closed with 160% yearly increase. For 2024, the signposts are as follows. We started the year in a very high sentiment. There's also the Ethereum Dencun upgrade happening in February, and the Bitcoin halving is also scheduled for April. We will talk about the Dencun upgrade later in this presentation. There has also been a few more things that are anticipated, whether Circle will IPO or not this year. The Federal Reserve signaled that there will be 3 interest rate cuts across the year. But we still don't know when that will happen. Analysts thought or were predicting that it could happen as early as March. But with inflation picking up again, people are a little bit confused. We'll talk about that in the next slide. There's also the U.S. presidential elections coming up in November. We're still seeing whether stablecoin regulations will come into effect or will not come into effect, but will finally have a passed bill in the Congress. And we're also on the lookout for UK crypto regulation. We ended the year with a really good sentiment in the UK crypto regulations. And there has been this flight to win regulation or regulatory competition. So we will see who will win the race this year. And we are anticipating a new all-time high for Bitcoin with the spot ETF approved in the US, but we will see how that will pan out. So we have 3 trends this week: inflation, Bitcoin's milestone, and Ethereum. We're gaining momentum. For inflation, on January 10th, the VP of the European Central Bank gave a speech about inflation in the Eurozone. Annual inflation has increased 2.4% in December. The downtrend is expected to continue. The Euro economy is struggling a bit, and the 3 key ECB interest rates will remain unchanged. In the next slide, I will tell you exactly what is keeping inflation sticky. But first, I'd like to remind you why this matters. Why does inflation matter for crypto and Bitcoin especially? So Bitcoin is rising again with its narrative as an emerging store of value, a hedge against currency debasement or counterparty risk. So people that are in jurisdictions suffering from inflation have resorted to Bitcoin, and they continue resorting to Bitcoin just to hedge against inflation, as they see that it moves in the opposite direction of weakening economies or sticky inflation. So this is the breakdown of the inflation in the euro area. We have seen in the past that oil has been a main contributor, or energy has been a main contributor to inflation, especially in 2022 with the invasion of Ukraine and the oil crisis. We are not seeing that now. We're seeing that or energy is in the negative, and it's steadily in the negative over the past months. But one thing that is still stubbornly sticking and making inflation stickier in the Eurozone is food inflation. It has declined from the 15% peak in March, but it's still above the 6%. And that's the main driver of inflation in the Eurozone. In the US, in comparison, although it has also increased by 3.4% over the past year through December, it's the main drivers of the US inflation is housing, rentals, and even rental cars or even secondhand cars. Investors expected to have a first rate cut as early as March. Some even expect after that there will be a rate cut for every meeting. So that's 7 federal meetings. So that's 7 rate cuts. We still don't know what will happen for sure, but we know that the funds rate statement is scheduled for the end of this month. Bitcoin's milestone. So on Jan 12th, Bitcoin fell by 7%, almost 7% overnight. And this decline came after a 2-day rally after the approval of 11 spot Bitcoin ETFs in the US. The rally inched towards the 50K mark, but that was the resistance point. We can deduce that investors were either taking profit when Bitcoin broke 49K, or they're positioning themselves ahead of the halving. But we also have another analysis. Bitcoin corrections. So in 2023, it was the only year that Bitcoin didn't have a single correction in nearly 10 years since 2014. As you can see here, this is a chart that Ellie has thankfully came up with just to keep a record of the Bitcoin corrections since 2014. So we can deduce that once every 5 years, we should expect such large drawdowns. But also these drawdowns are because this is just history. It's a lagging indicator. So price movements in the past are not indicators of the coming price movements. But yeah, history often rhymes. It doesn't repeat itself, but often rhymes. So Bitcoin dropped 43 times by more than 10%, or nearly 10 years. That's less than 1.3 chance in a decade. In other words, nearly once a quarter, investors may expect a decline of more than 10% in a day. So this is just to show you that it's all factored in. There's nothing scary or shocking. This is all working by the numbers and proceeding accordingly. And this is also a fun story. So as you guys may know, when gold had its first ETF in 2003, it had almost the same market cap, which is 1 trillion, as Bitcoin. And Bitcoin, of course, not 1 trillion now, but it was roughly that. And it is now around, I think, $13 trillion. And we can see here that it took gold a little bit of a time to reach the peaks. So that is just a fun fact. And I know it is controversial to compare gold to Bitcoin. I know the gold industry does not like that comparison. But Bitcoin, conversely, has been proven to be the digital gold of this era. And it also has some leverage for gold. That, it is a tech play. It is a distributed ledger. And it is a store of value that you don't have to carry around with you, for example, or that cannot be lost in war or geopolitical conflicts or stolen physically because it's just laying around there. That's just high level. but that is where we are pricing in, or this is where we think Bitcoin might go with gold's journey. But we will see. Only time will tell. This is also a speculation, and it's just fun to see that the numbers actually align scientifically. This is also another testament to what I just said, that there might be just profit taking, and this chart shows that there has been some transfer volume from short-term holders, so retail investors who just bought Bitcoin when, like I said, when Bitcoin reached 49K, about 48,000 Bitcoins were transferred to exchanges, levels that we haven't seen since almost 3 years ago. And given that Bitcoin grew by nearly 90% since the initiation of the ETF applications in June, it is logical to see that there is some profit taking, especially ahead of the Bitcoin halving. So these are just fundamental metrics. For context, Bitcoin miners take their cuts, so they take their salaries from issuance, like issuing new Bitcoin, and also transaction fees. So these transaction fees were very boring, like in maybe 2 years ago. Now, with more development on Bitcoin, that's namely Ordinals, the revenue streams of Bitcoin have expanded. So the chart here shows you that fees extracted from Ordinals. Ordinals is a protocol on Bitcoin that basically facilitates something like NFTs, but they're not NFTs, they're called inscriptions. So a nice analogy for inscriptions is just drawing on a banknote. So this is basically it. They inscribe text, any kind of media on hashes or satoshis of Bitcoins. And that is what, this is how NFTs came about the Bitcoin world. So here we can see that ordinal fees have reached almost or more than half of the entire transaction fees on Bitcoin. This is not the most, so it has reached, I think, above 60% in May. There was also an ordinal rally in May last year. But this year, it's also reaching, it's not stopping. Although there were some controversies around ordinals and whether is it healthy for Bitcoin, is jamming the mempool, but it also is a great way to utilize layer twos like stacks and the Lightning Network that have been, especially stacks, have been really profiting off of this or benefiting off of this. There's also something else called Pizza Ninjas. There's something on that is leveraging the ordinal technology. And that is just a use case to show you how Bitcoin is expanding in use cases. So the Pizza Ninjas is a fun protocol. It has many legs. So one leg is just profile pictures, just like the normal NFTs. If you remember Bored Apes, for example, something like that. But it has a different use cases. So you can use this fun avatar to your own commerce or to build, for example, a game or a shop or whatever, and you have a commercial license to use that. So that is one use case. And another use case is that they are trying to leverage the ordinal technology to streamline or make video games that are almost getting extinct, like Nintendo, for example. They're trying to make it permanent or make these coming extinct games on the Bitcoin network permanently and securely. That is also a great use case of the ordinal technology, and we will see how that will benefit the network in the near future. And with that, as I said, since more developers are seeing that stacks and other layer twos are benefiting off of this new expansion of the Bitcoin use cases and thus adding more pressure on the mempool of Bitcoin, more layer two solutions are emerging to help scale Bitcoin. And there's this zero knowledge proof scalability solution that follows the same, more or less, same business model as Arbitrum and Optimism, but on Bitcoin. So we will see how that pans out. This is just the fundamental metrics, just what is happening on the back end of Bitcoin. And we are big believers of fundamental metrics, that they are the real leading indicators. So this is the third and last trend here. Ethereum is regaining momentum. And surprisingly, it has been regaining momentum over the last quarter of 2023. It has actually outperformed in percentage change Bitcoin's performance. And it has rallied more than Bitcoin when the spot Bitcoin ETF was approved. So it has increased by 10% over the past week. The jump came in tandem with the spot Bitcoin ETF approvals. And there was some speculation around maybe an ETF for important in the US, but some people came about saying that it's a far-fetched speculation. But what really happened here was that on January 11th, so just to show you what actually happened in comparison to the speculation, on January 11, Vitalik Buterin on Reddit proposed to increase the block gas limit by 33%. From 30 million units to 40 million. The 30 million units limit has been around since 3 years. So that would be the first time that it would increase. And that would allow more transactions in each Ethereum block and improve capacity and speed. Another thing that is happening very, very soon is the Dencun upgrade. It's currently being implemented on the testnet 𝕋𝕚𝕞𝕖. And I will tell you exactly what the Dencun upgrade is about. In a nutshell, proto-dank sharding is the main star of the Dencun upgrade. What is proto-dank sharding? It's an improvement, without going into the details of the technicalities, for scalability, because it's expected to boost network throughput and reduce transaction fees on layer 2s and the decentralized apps on Ethereum. So it's essentially really good news. It should be really good news for layer 2s, as the upgrade should reduce the transaction fees on rollups like Arbitrum and Optimism by about 90%. And that should happen in February. Of course, there's also phases, but that is basically in a nutshell. And we should expect some reaction accordingly from layer 2s. These are the fundamental metrics for Ethereum. And the NVT, or the network to value ratio, is our favorite leading indicator of Ethereum. It's basically synonymous to the P/E metric for companies. So it basically shows you how the network is valued, if it's overvalued or if it's undervalued. So we can see here the black line here is in downtrend since last quarter. And a downtrend means that there is a bullish sentiment and there are improving fundamentals, just like I said, with the Dencun upgrade, and even more with Vitalik's proposal. So if we want to compare to the recent past, for example, this is here, it's close to 94.8, and the ratio is 94.8 in a monthly average. In daily average is 151.7. If we look back into the recent past, it was around 500 or 400. Yeah, it was around 500. So that means that it is getting, the downtrend is very sharp, and that means that the network is actually undervalued, because there is more network activity, and actually there's more transactions on the network, and it hit a multi-year high. So that really goes in line with this metric. And yeah, it's a big indicator why this metric is one of our favorites here at 21 Shares. So these are the price and TBL movements. It goes perfectly in line with my last trend of the day. Ethereum is the biggest winner in its layer 1 realm by 10.61%. And over the past week, Arbitrum and Uniswap have been the biggest winners in DeFi and layer 2 realms. And that shows you how traders are excited about the Dencun upgrade and what it may bring to dApps and rollups built and to scale Ethereum. And that is it. Thank you so much for tuning in. Let me quickly see if there has been any questions. Will Solana flip Ethereum this year? This is a big question in our department. We have some people who are very bullish on Solana, and they think that it will flip Solana. I personally think there will be some sort of flippening. It's not going to flip in Ethereum this year, maybe in the coming year. But I think it has a lot of leverage. There's so much going on. And so there is so much going on with Solana as well, with its new phone that they just announced. They announced a new, cheaper phone a la Apple. So we will see how that will go. But I don't think it will totally flip and eat. But that is just my modest, humble opinion. What is NVT again? So let me go back to the slides. So NVT is network to value ratio. This indicator, basically in a nutshell, it indicates, or it gives you a picture of how valued or overvalued or undervalued this network is. So network to value is the price, and the network is the network transactions on the network. And that is how it's that's how it's calculated. It's calculated by dividing the market cap by ETH volume transmitted to the Ethereum network. What about XRP? There has been some talk about XRP, especially in the World Economic Forum, but there are no fundamental. That's why I shy away from speaking about other people speaking, basically. But it's all talk for now. We still don't know what's going to happen. But personally, I am very bullish on XRP and its product market fit. I think it has reached a product market fit, and it has reached a level of maturity that we haven't seen before, especially with the partnerships that it has forged left and right with governments, essentially, to build their own CBDCs. You mentioned Stacks as a layer 2 DeFi solution. What are the key features that make you prefer it over the other BiFi solutions? I did not say that I prefer it over other BiFi solutions, but one thing Stacks has that other BiFi solutions don't is the regulatory clarity. It's one of the earliest crypto companies that have actually raised time and just went ahead and applied for securities or for a license. And that's the only leverage. That's the only regulatory leverage that I think Stacks has over others. But thank you. So do you have any general opinion on Bitcoin mining stocks regarding the upcoming halving? They have corrected quite significantly from the tops. My general opinion would be that it will be quite a difficult time for Bitcoin miners. The Bitcoin halving will lead to this infiltration of Bitcoin miners that weren't really profiting as much. And it is sad to say that will affect a lot of retail miners. That's something that breaks my heart, really. But that's the matter of fact here. Any news on the project mBridge and Ripple partnership, or will mBridge work by themselves with the CBDC? I am not quite sure what that is about. I will definitely read more about that, and you will definitely hear more from me on that. For the RWA, or the real world asset narrative, which coin chain would you say would benefit most from this? If you're talking about tokenization as tokenizing real world assets, I would say Ethereum is still benefiting from it, and it has been the top benefactor of real world assets. I'd also like to highlight that our market outlook for 2024 is coming out on the 31st of Jan. Really excited to hear everyone's feedback about that. We are already seeing some early innings that help our market outlook be materialized. Can't wait to have this see the light and be read by everyone here. Thank you, guys. I hope you enjoyed this quick recap of the week and the first analyst call of the year. Hopefully I'll see you soon, and hopefully this panel will not be as lonely as it is now, and you'll see the rest of the team. Thank you so much for tuning in, and stay tuned for the presentation and the recording. Have a great day.